Hi there, this is Alexo, and today I'm going to interview economist Andrei Polgar. He is the founder of the YouTube channel called 1 Minute Economic and also the author of the book The Age of Anomaly. This is a great book where he shares his concerns about the current state of economy and also helps people be better prepared for an eventual economical crisis that may happen in the near future. So how are you, Andrei Polgar?
First of all, thanks a ton for having me, and thank you guys for watching. I've essentially become known as the Economist dude on YouTube through my channel, 1 Minute Economics. It kind of grew in popularity as time passed. Now I have universities who use my stuff. My videos constantly get mainstream attention as well. And I feel that kind of with this status as the economist on YouTube, as many perceive me as being, there does come a certain degree of responsibility. And frankly, never before in my career have I had this sense of, one, responsibility, and two, urgency, as I had when writing The Age of Anomaly. Because I don't want to be kind of left with this lingering sense of guilt because I had these concerns about the economy, because I thought to myself, look, this just isn't right, this is going to break. But then I didn't say anything because it was uncomfortable to do. So I'm doing the exact opposite. Now I'm all over YouTube. I've done many collabs. I'm on the podcast scene as well. I'm essentially doing my best to spread the word about the things that I see coming. Now, on my channel, I kind of have a reputation for myself as this balanced economist, so I'm not exactly the type of person who is quick to panic. And this is actually my most important initial message for people. When someone like myself panics, then maybe it's wise to at least pay attention, which is what I hope people are going to do. And once they check out the things I have to say in my book, they're going to kind of realize there is method to my madness.
One thing that I enjoyed reading about your book is I never actually read a book similar to yours, so what I liked was it was really simple for me to get into the book, understand it, because you don't use many economic or economical terms which are hard for people to understand, the common people to understand, and that is something that I actually enjoyed about your book. So it's an easy book for anyone who wants to get in and have more knowledge about the previous economical disasters that happened along, I think it's about 5 centuries that you mentioned along your book.
Yeah, I have just a bunch of case studies, but like you mentioned, they're easy to digest. They're even entertaining. It's kind of like you
Yes,
have a
yes.
friend who's telling you a story. And yeah, I have case studies ranging from the Tulip mania, which peaked in 1636 to 1637 and was the first recorded asset bubble, up until popular recent events like the dot-com bubble, like the Great Recession, or even not so popular ones like the short domain mania of 2015 to 2016. Like
Yes, yes.
I'm 99% sure I'm the only economist who ever studied that one. So I do try to give people kind of proper economic historic context because, yeah, like history is all about learning what makes us tick. And if you're serious about landing on your feet and not being caught off guard by financial calamities or even personal disasters like emergencies in our family, medical stuff, unexpected expenses or whatever, you need to have a firm grasp on economic history because it's basically a glimpse into who we are.
And one of the most interesting things is, I think you mentioned about 16 economical disasters that happen along history. And one of the most interesting things is there's plenty of similarities between each one of them. And it seems like people are constantly doing the same mistakes over and over again. And it's always happening in this economical disasters. And for that reason, I want to first start talking about the three economical disasters that happen along history. Of course, we cannot talk about all 16 because there are plenty of them. So I want to first talk about the dot-com bubble. Uh, so could you better explain the dot-com bubble, what exactly happened, so people can have a better idea?
Of course, the number one thing I tell people about history is that it doesn't necessarily repeat itself in an identical way, but
Yes.
it rhymes, and that even if the manifestation differs from case to case, sometimes it involves tech stocks like the dot-com bubble, sometimes it involves primarily real estate and so on. But yeah, if we pay attention, it's going to be easy to identify common denominators, to see that there are just certain things that we do wrong, and there's just a ton of value in knowing them. Now, when it comes to the dot-com bubble, It's actually one of the main reasons why I'm worried today. Some of the earlier roots have to do with the
The
dot-com
dot
bubble.
com, sorry to interrupt, but the dot com bubble was in the end of 1990,
Yeah,
1999.
exactly.
Just
And
so
back
people can
then,
have a better idea for someone who
sure.
doesn't know.
Yeah. So basically what happened then is that, of course, people got carried away. We tend to do that when investing in technology, whether it's tech stocks, Bitcoin, railway stocks in the 1800s in the UK, and so on. So, of course, people got carried away. A bunch of companies had huge valuations. And then, of course, the market crashed. The market crashed. Everyone panicked. But, and this is important for our conversation, the narrative was this: don't worry, don't panic, people. Governments and central banks have it all under control. And essentially what they did to quote unquote save the day was lower interest rates from 6.5% to 1%. Now, if you're not that good at economics, guys, the simplest way for me to put it, it's kind of like giving a dose of economic cocaine to someone so as to give him a performance boost. And it worked. The day was saved. That was the narrative. But there was just one problem. This easy access to cheap money made it possible for an even bigger bubble to be inflated.
Yes,
The real estate bubble.
real estate.
And
Yes.
as we all know, from 2007 to 2008, that collapsed. Once again, people made mistakes. You see the similarities. People made mistakes. They got carried away. Everyone got a mortgage. People got loans who shouldn't have gotten loans. They were overly optimistic on real estate. People treated their houses like ATM machines and so on and so forth. So naturally, it all led to yet another collapse. But once again, the same narrative was pushed. The market was crashing, but don't worry, governments and central banks are here to save the day. Here's a bit more economic cocaine for you. And that's the problem, because much like a cocaine addict, the market demanded a bigger dose this time. So not only was it enough to lower interest rates to 1%, they had to be brought to zero in the United States and in the European Union and Japan, even negative. They even had negative interest rates. And not only that, money was injected into the system directly. That's what the market demanded. And in the United States, just to give you some context, from 1913, when the third central bank of the United States appeared, the Federal Reserve, up until the Great Recession, so in almost 100 years, the monetary base had reached $850 billion, a lot of money. But then, when they pumped money into the system, at the height of it all, they pumped $85 billion per month into the system. Let's multiply that by 12, and we realize that we're talking about 1 trillion per year. More money injected into the financial system in 1 year than had existed after 100 years of central banking in the United States. And for this reason, I'm glad you opened the discussion with the dot-com bubble. We go from dot-com bubble to real estate bubble. And what worries me is that, of course, we're going to have another financial crisis. And, of course, the same narrative will be pushed. Don't worry about it. Here's some more economic cocaine. Let's make our problems go away. The problem is, however, that eventually the market's going to say no. The market's going to say, I no longer respond to this economic cocaine. I no longer have confidence in your ability to fix the problem. And then the conversation switches from, yeah, we're in trouble, but don't worry, governments and central banks will bail us out. It switches from that to, wait a second, who is going to bail out governments and central banks? And that, my friend, is what keeps me up at night.
Okay. So let's talk a bit about the Great Depression, because that is one of the, basically everyone knows about the Great Depression of 1929. And let's talk about what exactly happened during the Great Depression and what caused the Great Depression.
Once again, the Great Depression was preceded by a period of unbelievable prosperity called the Roaring Twenties. The economy was roaring. It was doing great. As always tends to happen with these situations, people were prosperous, or at least they were feeling prosperous. That made them arrogant. That made them make capital allocation decisions. And in the end, it all became too unstable. And in 1929, of course, there was this Great Depression. Everything crashed. There was record unemployment. At one point, the single case study in history was reached when more people migrated from the U.S. to the Soviet Union than the other way around. So there was just this huge crisis, and what people need to understand is that the implications, and that's why I'm so aggressive in pushing my message and getting people to pay attention. More disasters in humankind than we realize have had their origins in economics. Like, yeah, of course there was the Great Depression of 1929, but what happened next? Well, among other things, countries went off the gold standard because they wanted their currencies to be cheaper, so as to boost exports. So everyone was in a war, in a race to get their currency to be cheaper. This is called a currency war. But it didn't stop there, because eventually, in an effort to protect their economies even more, countries engaged in protectionist practices. They said, no, we have to grow our economy ourselves, so we're going to impose tariffs. We don't want to import anymore. We want to punish companies that import. So in the end, if you're the only country that imposes sanctions on other countries, you're going to be the man. The problem is that it's not going to happen, because everyone's going to do the same. And in the end, that turns into a full-fledged trade war. And we all know, at least history does give us good examples of this, economic crisis situations frequently lead to trade wars. These to currency wars, they then escalate and degenerate into downright trade wars, and then it's only a matter of time until you have conflicts of other natures. So once again, you've talked about parallels, and that's very good. What do we have today? Of course, we had, a massive crisis, 07, 08, everyone was panicking, the financial system especially was shook to its core. Then what happened? Then, as we all know, countries, whether it's China, whether it's the United States, whether it's the European Union, countries were desperate to weaken their currencies so as to boost exports. So we have had quite a few case studies of currency wars. We already had them. It was a widely spread thing. Now, if you look around you, you're going to notice that more and more countries are embarking on protectionist trajectories. Once again, we want to protect our economy. We don't want a trade deficit with other countries. The problem is that everyone's doing the same thing.
Basically,
it's impossible. Yeah.
Basically, it's what is happening with the United States at the moment.
Exactly. Right now, as we're talking, we are in the middle of the largest trade war known to man, at least the largest that I know of. That between the United States and China. And this is why I think it's important to read a book like The Age of Anomaly, to have this historic perspective.
Yes.
Because if you know what happened in the past, and if you know where this kind of behavior on a large scale, what it can lead to, it's impossible for these things not to give you goosebumps. It's impossible for them not to make you concerned. And that's why it's important to have this knowledge, to kind of see things in perspective and filter them so as to make sense of what's happening today, based on what happened in the past.
Yes, that is why along your book, you focus so much in economical crises that happened in the past, and also go so much in detail with the similarities between each other. We talked about 3 different economical crises that happened. Could you just give an idea of the similarities that each one of them have? Because I think that is important for people to realize the similarities that happened with the economical crisis in the past, so people can nowadays see more exactly if there are similar things that are happening with the economy.
First and foremost, you have to understand that when it comes to financial crisis type situations, the 2 leading emotions that dictate our actions are simple: fear and greed, or better said, greed and fear. Yes. Because you had the Great Depression, you had the Roaring 20s, everyone was doing great, everyone was getting rich off the stock market, people became greedy, they thought it would come to no end, they thought the good times would last forever. The dot-com bubble, once again, tech stocks are the future. Prices are going to go sky high. Who cares that this business is never ever going to make any money? Let me just invest in the stock anyway, because all tech stocks go up and we're all going to get filthy rich. Then you have The Great Recession. Hey, real estate is rock solid. Real estate can never go down. It's the perfect investment. You're going to invest in real estate, then you're going to use that money to buy more real estate, and we're all going to get rich off real estate. So it's this greed that makes us lose our minds. This greed that makes us make essentially bad decisions, like investing in stocks of companies that have no future because they don't even have a present. They're not making any money. Or the idea of, like what happened in certain situations in the United States. You had a professional escort that had 5 mortgages. These types of situations are, of course, kind of like a poster boy for greed. But then the weird thing about humans is that we so quickly go from greed to full-on panic mode. Once it starts crashing, oh my God, the sky is falling. We lose our minds. And just as we were eager to be greedy and overly optimistic, we become just as eager to panic sell our portfolios. And this is why, guys, you need knowledge. Because knowledge gives you clarity. You know what happened. You know how humans think. You know these things. That clarity is going to enable you to remain lucid when everyone else is irrational. So when people think they're going to get filthy rich off something and prices are sky high, historic highs or whatever, you're going to say, hey, maybe it's time to take some profits off the table. And the same way, when people are panicking, oh my God, the sky is falling, you're going to say, look, I think prices have dropped too much. It's time to go bargain hunting. So that's why I'm so big on knowledge, because it's precisely what's going to enable you to remain lucid.
And one thing that I've noticed is most of the time, people invest in things that they simply have no idea where they are putting their money in. And that is one of the major causes of the crisis to happen, because people are just investing based on greed, as you said. They want to do money and invest in something that they just don't have any idea about what they are actually doing. And
that's actually a frequent similarity. Even the tulip mania, which sounds ridiculous. Why should tulips be worth so much money?
That was one of the first.
But even that one started out as something reasonable. Like, for example, at the beginning, people were paying a lot of money, but only for tulips like the Semper Augustus, of which only a few existed in the world. So the idea of rich people paying a bunch of money for something that's rare, that's not ridiculous. But then people started paying for tulips that were less and less rare. Then you had people who got into the game just because they saw prices going up. They didn't care about tulips. They could care less about gardening. They had no idea how to do these things, but they wanted in on the action. Then you had tradesmen like weavers who used their looms as collateral to get loans and buy tulips themselves. And then you had this wave of people who just got in, as you've mentioned, because they saw prices going higher. The same principle is valid when it comes to stock or anything else. At the height of it all, you're always going to get people who do not care about the asset in question. They just see other people getting rich and they want to get rich themselves.
And often these are people that don't even have money to invest in whatever is the asset.
Exactly. Even when it comes to tulips, some of the first people who got rich among average individuals were, again, weavers, because their looms were expensive, they could use it as collateral, and they borrowed money against them so as to buy tulips. The same principle is valid when it comes to stocks, even when it comes to the short domain mania I've mentioned. I was frequently talking to people in China when studying it, and they were like, oh yeah, everyone is getting high interest loans in China and buying domain names. They're getting what? High interest loans. And I asked the broker in question, he was a Chinese domain broker, okay, but what's going to happen when prices go down? And he was like, what do you mean prices go down?
They didn't even consider that.
They didn't even consider that. Once again, yeah, you have people who don't care. They just see money, they just let greed influence their actions, and yeah, it's one of the most common similarities for sure.
Yes. And why do you say that we live at the moment in a sea of uncertainty?
Because right now, I see so many, as I call them, pockets of anomaly, that I think it's irrational not to worry. Now, as I've mentioned previously, we have our economy that is hooked on this economic cocaine. It wants stimulus. It's going to want even more stimulus later on. And that's a huge problem, especially since here we are 10 years after the previous financial crisis, and interest rates are no near normal. They're still low. Even in the United States, let's not talk about Europe and Japan. So we have that. Speaking of 10 years, Number two, another example, another reason would be the fact that only once has it happened that more time passed between recessions than right now. And if another year goes by without us having an economic crash, it would be a record. So that's two. Number three, once again, we've mentioned it, the geopolitical aspect. From countries' willingness to engage in trade wars to all sorts of geopolitical implications that are not subtle at all. They're visible with the open eye, just how crazy things are right now geopolitically. We have that pocket of anomaly as well. So all of these reasons combined made me choose that subtitle for the book. Because even the cover, I have it right here, I think it perfectly illustrates kind of like the state of the economy. Here we are looking towards the many storm clouds that are gathering. And the more you look, the more you pay attention and actually analyze the arguments, the more you realize that we're going to be in for a major storm.
Yes, you can notice that. You actually feel the tension in the air that something is just about to happen economically.
I'm a hands-on economist. Like I put a good balance between book smarts, from bachelor's degree to PhD, but also street smarts. From trading cryptocurrencies to being involved in real estate here in Romania to all sorts of other things. I have my ear to the ground. I know, what's happening at the ground level as well. And yeah, there is this lingering feeling the economy is chugging along, but even everyday people who aren't economists and who aren't passionate about economics, they do feel, some of them have no idea, they do feel that something is wrong.
Yes.
They cannot articulate exactly what that something is, but they feel it deep down inside, and it's hard not to.
Even before I read your book, I already had that feeling that something just is wrong. And after I read your book, things just turned more clear for me. And that's the reason why I recommend people to check your book and read it, because it gives more clarity, as you already mentioned. Anyway, what can people do to better spot financial crises before they actually happen? What are 3 aspects that you can give people at the moment so they can do this in a better way?
First of all, there's no escaping economic history. Know your economic history, not because you're going to know for sure that things are going to happen in the exact same way. Again, history rhymes. You study history to learn what makes us tick, why we become overly euphoric, why we then move on to being excessively pessimistic. So first of all, know your economic history. Then, again, keep your ear to the ground.
Sorry to interrupt, but economical history is basically studying economic crises that happened before, as you initially mentioned along your book, the 16 economical crises that you mentioned.
Exactly how I mentioned it in chapter 3 of the book. It's going to give you more than enough in terms of historic context to see things clearly. And then, number 2, you keep your ear to the ground and keep up to date with current events. Now, I'm not saying you should have your TV on the news channel on 24/7, no. But spend at least a few minutes each day reading the news, staying informed, because you're going to see what's happening, 1. But on the other hand, 2, you're going to be able to interpret that information as someone who also has a historic context. You're going to know what to be worried about, when you shouldn't be worried, and essentially more so than the average person who just, watches the news like you would watch a movie, you watch it so as to pay attention for signals. Yes. So that's extremely important.
What kind of signals are you mentioning that people should be more aware of?
Well, for example, if you're following an asset class like, I don't know, the stock market maybe, if you see more and more case studies on the news of how people got rich by getting loans and investing in stocks or trading stocks. And then there are documentaries about this, like how there have been documentaries about how to get rich in the real estate market prior to the previous financial crisis. That would be an example of a signal. You see that, the average person sees it and only says, okay. You see it, and as someone who knows economic history, you're going to say, wait a second, something similar happened back then. Something similar also happened back then. This is a cause for concern. The same way, when it comes to geopolitical things, you see a trade war between China and the United States, the average person just sees a show. Oh, look at these politicians making a fool, or having this show, having these contradictory statements or whatever. you, as someone who is economically literate now, that you know a bit of history at least, you're going to say, wait a second, this happened before. And when it happened before, it didn't get pretty afterwards. So this is kind of the thing. By paying attention to current events and being knowledgeable enough, which is what I try to help people do with the book, to interpret these events, you are going to be just, in an amazing position to spot the next financial crisis as early on as possible. But the second dimension of my book is about something equally important. I think about these things all day because this is what I do. It's part of my occupation. But even someone like myself needs to have the humility it takes to say, look, the next financial crash might take me by surprise as well. So it makes sense to dedicate just as much time and energy to becoming more financially resilient, which is what I try to help people do in the second part of the book. Maybe you're going to spot it early on, maybe you won't. But by being financially resilient and working on being financially resilient right after watching this video, you can essentially incorporate a few simple things into your life. I take people from one asset class to another. It's not difficult. And that's the perfect combination, Having the knowledge it takes to have clarity and be lucid, and at the same time having the humility it takes to get your bases covered and put together the kind of strategy you need to land on your feet. Okay. It's not that complicated, but you have to do the work.
And along your book, you mention about being financially resilient. What exactly is that, and what can people do to be more financially resilient?
My most important goal, maybe, with the book is turning people into independent economic thinkers. Like, I don't want them to be dependent on my advice or anything else that I give them. So essentially, being resilient is not complex. What I do is I take them through each asset class, from traditional ones like your real estate, your stocks, your precious metals, whatever, to exotic ones like domain names, cryptocurrencies, peer-to-peer lending, you name it. And I help each person say, look, for someone in my situation, because if you live in Egypt and are only a regime change away from losing your real estate maybe, because it gets confiscated, then I'm going to be far less likely to recommend real estate than I am if you live in a country with a proven track record of respecting property rights. So what I do is I help you, the reader, say, look, for someone in my situation, it makes sense to have exposure to what? To this asset, to that asset, to that asset. Why? Well, I need exposure to this asset for reason 1, reason 2, reason 3. I need exposure to that one for other reasons. And you're going to have these deeply ingrained in your subconscious. And without even realizing it, you're going to make it a goal to have exposure to all those assets, and you're going to be on a continuous lookout for bargains. Once again, it boils down to clarity, Let's assume we have a huge stock market crash. People are going to panic. They're going to lose a lot of money. Maybe some of them even borrowed money to invest in stocks. Whereas you, after seeing that prices have dropped so far a lot, you might say, wait a second. In my strategy, I made it a goal to have exposure to this stock, to that stock, and now I see that it's on a huge discount. Maybe it's time to buy. And once again, you're going to do this now. Maybe when there's a drop in the price of another asset, you're going to do the same. And before you know it, you're financially secure. It's not some simple formula. It's not, no. A few basic things, if you internalize them and make them a part of your life, which is what I try to do to teach people in the age of anomaly, a few simple things are all it takes to make the difference between someone who is financially resilient enough to land on his feet after a huge economic reset or anything like that, and someone who gets decimated. Like, the stakes are very high, which is why I tell people, if you are to learn just one thing from this video, it's that you have to do something. Like, don't close this browser tab and binge watch Netflix. Just do something, because the stakes are high. And right now we are at the stage when nobody's panicking around us. So you can still do what needs to be done to protect yourself properly. If you wait until everyone else starts being frightened, then you can have the smartest economist in the world by your side, and there's not much he can do for you.
I think that is one of the problems that most people have. Even before I read your book, one thing that I noticed is it was something that I simply didn't care much about. And I think most people are in the same shoes. They just don't care about the economy. They see things, but they think that what is happening will just pass and nothing will happen. But eventually something happens and people lose money, lose their assets, and their
The
job.
number one of the main things actually that I tell people is you cannot escape making economic decisions. Like even if you don't do anything, you're still making the economic decision of not doing anything, and there are
Yes,
going to be consequences
consequences.
which derive
Exactly.
from that decision. The same way when the next financial crisis comes, it's not going to knock on your door and say, "Hey, I'm thinking about crashing the economy. Is it convenient for you, or should I return in 6 months?" You know, you're not going to have that luxury. When it comes, it comes. Nobody's going to care that you didn't have time. Nobody's going to care that you weren't passionate about economics. Essentially, this is why the stakes are so high, because behind these numbers are going to be lives. Like even during the previous financial crisis, destinies were destroyed, jobs were lost, families went through horrible things, people got depressed, lives were ruined. So again, the stakes are very high, and it might just seem to many, yeah, economics, I don't care about those numbers, you
Exactly.
know, I want to watch a movie, I want to have some fun, I'm going to work it out.
I mean,
Except you won't. Except
there's really no escaping. Either
there
if
is
or
absolutely no
not, there's no
escape.
escaping. So it's better for someone to be better prepared in case something happens, because I really feel that something will happen inevitably, and it's better for someone to be better prepared when that happens, so they actually don't struggle so much along a financial crisis. So yeah,
Exactly. Exactly. Nobody is going to care why you didn't have time to prepare. It's
exactly.
going to be every man for himself, every family for itself. So essentially the only thing you can the only again, the only logical thing you can do is prepare now when the time is right. The more you wait, the more you're playing with fire.
Exactly. Yes, yes. And what is your biggest worry about nowadays? What are you worried about nowadays when it comes to the economy? What worries you so much?
I am someone who even trades cryptocurrencies, so I'm not exactly the type of person who is easily spooked by something like a 60% market collapse. So right off the bat, I'm not afraid that the stocks market is going to crash. I'm afraid of what happens next, as mentioned in one of my earliest examples. Because what happens next, and as someone who lives in Eastern Europe and who grew up in a very difficult country to live in, I was fortunate or unfortunate enough to see that systems sometimes do fail. And this is my main concern, because we're going to have a crisis, people are going to panic, but when the market, which is what I think will happen sooner rather than later, when the market loses confidence in the system, in the ability for governments and central banks to solve problems, it's going to be every man for himself, because our banking system, as I explained on my YouTube channel, is confidence dependent. There's no such thing, guys, as one bank that I know of that would be able to survive if 3 out of 10 people want their money back. It's a fractional reserve system. There's just not enough to give everyone.
Yes, yes.
The same way, our monetary system is confidence driven as well. And if you live in the United States or Germany or a wealthy country, you might be tempted to say, yeah, don't worry about it. We have this robust system with many independent institutions which safeguard against one another. But as someone who has seen systems fail firsthand, I can attest to the fact that quote unquote society as we know it tends to hang on by a thinner thread than we realize. And to a large degree, that thread is represented by confidence. Once confidence vanishes, all bets are off, and the result is an inevitable economic reset. And for the average person, this means a huge transfer of wealth. I have read enough economic history in my life to know that most people, unfortunately, are going to be on the wrong end of that transfer of wealth. So that's why I feel this huge burden on myself to kind of spread the word to anyone who cares to listen that look, for these perfectly rational arguments, there are more than enough reasons to be concerned. Don't make this your number one priority. Don't run for the hills and stock up on guns and ammunition. No. But think about these things. Think about these things, because you will see as time passes just how high the stakes are. I hope you will be prepared enough. I hope you're going to be able to use, the information I provide in my book to be prepared enough. But it's going to be awful regardless, because you're going to see friends who lose it all. You're going to see family members who go through personal traumas. I try to focus on this as well. Don't assume that just because you're going to be well prepared, it's all going to be amazing. No. it's still going to be depressing. It's still going to be bad. But you have no choice. You just have to do the very best you can do
I
to
mean,
kind of position yourself properly, and then it's outside your control.
I think most people remember the Great Recession, so it wasn't a long time ago, and saw family members losing their jobs and so on. So it's something that happened quite recently, and it will eventually happen again. So
Yeah, for sure. Again, there's just no way to hide it,
yes.
to hide from it, actually. There just isn't.
So you are about to launch a new book called The Age of Anomaly 2, and
The Age of Anomaly, What Management Do is my first book.
okay, so but what will your new book be about?
Well, the exact title of the book, I'll go ahead and show it to you guys again, is The Age of Anomaly: Spotting Financial Storms in a Sea of Uncertainty. Like, it's a huge book. It's 400 plus pages long, but again, it's not going to seem like this arrogant economics professor is talking to you. It's going to be just like you have a friend who's sharing some tips who just happens to be good at economics and money stuff. So what I do is I know that this is going to be probably the only book about financial preparedness that my readers are ever going to read. So I did my best to provide a from A to Z type guide. So through this book, I will essentially, I believe, teach you everything you need to know to be properly prepared. I'll guide you through history, I'll draw parallels and conclusions so as to help you understand the things that happened. I'm going to help you figure out how to keep your ear to the ground, how to pay attention to current events and interpret them properly. I'm even going to take it one asset class at a time and teach you how to be financially resilient in general. I keep it logical, I keep it easy to understand, and most importantly, just like what I do on YouTube and with my work in general, my stuff works. I don't care about sounding smart. I don't care about how pompous my wording is in my books. No. The only thing I care about is that I plant seeds in your mind that germinate properly. And basically, each paragraph that I've written in this book is a quest for me to convince you to read the following paragraph and get you hooked on the book and make you read it from start to finish and remember the things I've taught you. Because that's the only, I only care about results. As someone who even trades and has run a bunch of projects in his career, I'm result driven. And in the end, that's my main value proposition. I'm going to teach you everything you need to know in a way that works.
Okay, and you will have a promotion on your book this week. So
Yeah, like I genuinely don't care about the money with this book. And to kind of prove it, I'm going to do two things. Like, one, the book usually is going to cost something like $10. It's never going to be expensive. But when you're going to release this video, so until Sunday as of this point, people can buy it for just 99 cents. Like, someone who's in it for the money is not going to write 400 plus pages and sell it at 99 cents. So this week, I'm basically giving a fair shot to anyone who wants to get this book for, as close as free as it can get, pretty much. And also, two, those who are interested in the book, one, I'd recommend buying it this week since it's on a discount, but you might also want to head over to my youtube.com/1 minute economics YouTube channel, where I have a pretty awesome contest. Like, thanks to my generous sponsors, I am basically, because again, the goal is for as many people as possible to find out about the book. That's why it's so cheap. That's why I have the contest. So I'm going to encourage people to tell others about the book on Facebook, Twitter, YouTube, you name it, by giving them chances at winning prizes. The more you help me, the more chances you get. The first prize is going to be 1 Bitcoin. I'm going to have a second prize, once again, about $600 worth of crypto. I'm going to have $100 Amazon gift cards. I'm going to have domain plus hosting packages, hardware wallets, just a ton of stuff that you can win. And in the end, you're doing two things. A, you're spreading the word about a good book and essentially helping people learn pretty much actually everything they need to know about how to prepare for what's coming for just $1, essentially. And two, you might also win some awesome prizes. So in the end, I keep telling everyone that even when you're selling ideas, which is what I'm doing, I want people to be exposed to my ideas. Even when you're selling ideas, you're still selling. So I want as much attention for these ideas as possible, and through the price reduction, through the contest, I'm basically kind of doing, I owe it to myself to do the best I can to spread the word about this book, and that's kind of my goal with this campaign.
okay. I'm going to leave all of the links that people need to find your YouTube channel and also your book, The Age of Anomaly, right below in the description from this video. Anyway, do you want to say some final words before we conclude this video?
The number one thing for me is that those who watch us take some form of meaningful action after finishing this video. What that meaningful action is depends on you. If you want to buy the Age of Anomaly, of course. I think it's, obviously I'm biased, you know. I want you to buy the book. But even if you don't, it's fine. If you subscribe to my YouTube channel, I would be happy to have you. But if you don't, that's also fine. The only thing I ask of you is to do something meaningful after watching this video. Whether it's taking a long walk and just thinking about the next financial crisis and how well or how poorly you're positioned, whether it's something else, I am going to be the happiest camper on this planet if you just take some form of meaningful action after watching this video, and I believe this is the best conclusion we could possibly have.
Okay, thank you, Andrei Polgar. This was a good interview. I enjoyed having you here. And that is all for this video. I hope people enjoy and like and subscribe. And also go to your YouTube channel, 1 Minute Economics, and subscribe to your YouTube channel so they can watch your amazing videos related to this and also get your book, The Age of Anomaly. Okay, bye.
Take care, guys. Have a great day.